So I don't even really know where to begin with today's story, except to point out that a bunch of Reddit users, people on the internet, have beaten the best of the best when it comes to hedge funds, and they did it all by focusing on GameStop and other stocks like AMC. But there's actually a little bit more to it than that. But before I get into that, I have to thank you guys because a lot of you answered the call in my last video for one of my Discord moderators and actually raised almost a fourth of his goal within a few hours of me posting the video talking about how he's raising money to get his sick cat surgery. Thank you guys so much. As I said, there's no pressure in this campaign. I'm not Cenk Uygur. I'm not asking you for money all the time. I've never done a fundraiser on this channel ever, and I'm definitely not going to tell you that giving me money personally will get you stimulus checks like Cenk Uygur did. But I really do appreciate it. It's really sweet and endearing, and I know DJ is incredibly grateful, and I'm grateful on his behalf. But without further ado, let's get into what's going on with GameStop stock and all of the developments that have happened up to the point where I'm shooting this video. I'm sure since this video will be out tomorrow, it will be out of date by then, but whatever, not a big deal. We're getting into it right about now. So the first thing that you need to know about what we're talking about today is what is short selling. And for the most layman of layman terms, it is when a person, a company, or like a hedge fund or an investment or brokerage fund bets on a stock price that is going to go down. And the way that this works in practice, again, in its simplest form possible, is that the person, individual company, whatever, ends up borrowing the stock at its current price from somebody who owns the stock, then they sell it, and by the time that they return it, if there's a difference in the price, if the price went down, the person who did all of this actually gets to keep the difference as profit. So if you borrow a stock that costs $10, you sell it to somebody at the price of $10, and in the time that you have to return it, the price drops all the way down to $5, you would keep the $5 differential when you return the stock to the original person. However, in the same way that you would make money on a short option if the stock dropped in value, if the stock goes up in value, you are responsible to cover that differential. So if the price were to go up, I don't know, 1,600% when referring to GameStop, a lot of people who had the short position on GameStop would be out and have to come up with a ton of money. And fortunately for my tendency to let my examples bleed into the actual story, this is exactly what happened with GameStop stock. A bunch of people on Reddit, led by a specific Reddit user, decided to use the idea that a bunch of people were shorting GameStop stock to buy it, thus restricting the supply of that stock and increasing the demand of it, thus jacking up the price and selling that stock for a profit. At least that's how it originally started. However, eventually, this became about, according to these Reddit users and people on these financial discords, punishing the hedge fund guys for making these risky investments by continually holding onto the stock, bidding up the price of that stock, and making these hedge fund people who had short positions have to cover the differential. Now, my original reaction to this was not to join in with the economic illiterates and jump up for joy and celebrate the crushing of these evil hedge fund guys that don't do anything in the economy except extract money from other people. It was to kind of laugh it off. And the reason I was laughing it off was not because of this strategy, but it was because of the rationale behind this strategy. Because if you read some of these Reddit posts about why you should hold on to GameStop stock, they're absolutely hilarious. One of my absolute favorite ones was that this person was saying that we can remain longer than they can remain solvent. I mean, honestly, what do you do with some of these people who go out and write this and are also at the same time beating some of the smartest guys on Wall Street other than laugh? And laugh I did. If you ever look into the Hold the Line trending page on Twitter, you can see a lot of the posts about this, and you'll see a bunch of them that are just in line with the one that I just told you. Absolutely hilarious, 100% great to laugh at. However, of course, this ended up taking a turn because whenever a lot of big and powerful people in the finance industry are starting to lose money, especially to petty, lowman day traders, there's going to be a lot of anger and a lot of fire spit out from Wall Street and from the government, which in a large part serves those Wall Street interests against these people. So the backlash was incredibly strong. However, while words and tears are one thing, this got escalated well beyond the point where a lot of people expected when a lot of the day trading apps that everyday people were using to buy up and hold on to stocks like GameStop started preventing them from being able to buy stock. And they went even further than that in that they actually forced them to sell off GameStop stock in what seemed like a transparent effort to drive down the price of that stock, thus lessening the losses of hedge funds that are sometimes deeply invested in these day trading apps. This was absolutely insane. First of all, if I own a stock and you take it from me, regardless of whether or not you compensate me for taking it, you have stolen that stock from me, and that is absolutely unacceptable in any regard. The idea that Robinhood, the most popular of these apps, would just do this and not allow you to opt out of this because they said it was for your own good is absolutely criminal in my mind, and if it isn't criminal, it should be made criminal in the future. You can't be forced to sell off your stocks when you're perfectly fine hanging on to it. Now, of course, there is a rationale for this, in that there's always a rationale for this, and according to Robinhood, they were only taking these measures in preventing you from buying GameStop stock and sometimes forcing people to sell that stock as a means to protect their customers. However, because one of the people who invest in Robinhood is a brokerage firm or a hedge fund called Citadel Investing or some such thing like that, people got incredibly suspicious, especially because Citadel has the short position on a lot of GameStop stock. But of course, the CEO of Robinhood made an appearance on CNN's primetime show with Chris Cuomo, and he alleviated all of the concerns that people had with what his company was doing. No, just kidding, he did the exact opposite. In fact, he probably dug himself a bigger hole, and now I'm certain, or almost certain, that Robinhood as a company will never recover from this blunder.
Why? Explain why you had to do it if it wasn't to protect the guys who had shorted the stocks, which are the big hedge funds. How are you helping the little guy investors?
Well, I know that there's rumors around that, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants.
So why'd you do it?
Decision. Robinhood, as a brokerage, has lots of financial requirements, SEC requirements. We have to put up money at clearinghouses. The amount of money that we have to put up depends on market volatility, and we're in a historic situation where there's a lot of activity and a lot of buying concentrated in a relatively small number of symbols that are going viral on social media.
Now, to be fair, reserve requirements are a real thing. This could definitely play a factor in the decision making behind a company like Robinhood or almost any other financial institution. However, the fact that Robinhood did this as a preemptive measure before they were warned by the SEC or any regulatory agency that they were approaching their reserve limitations shows you that this might not have actually been about reserve requirements. And even if it was, it looks incredibly shady and it appears to be a conflict of interest, and thus, this is why I think Robinhood is not long for this world. Also, this is confirmed by the CEO that this was a preemptive measure and it had nothing to do with them actually meeting the threshold of those reserve requirements.
Why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements. And
the SEC hasn't said you had to do this.
Well, lots of brokers have to comply with these financial requirements and have issued restrictions on some of these names. And this is an industry-wide thing. You yourself mentioned that other brokers this week have imposed restrictions. And not speaking for other firms, but for Robinhood in particular, this isn't because there's deals happening with market makers we route to or market participants.
But then why did you allow people to keep selling but not buying? The reason that is so troubling to people is that they were making money buying the stock because they were against the short side. And so by enabling them to sell but not buy, it sounds like you were allowing the hedge funds, and again, one of them owns a piece of you, and they had a big short position, and that looks like a stinky conflict that you didn't come out straight on from the start.
Now, as if this wasn't bad enough, this contradiction with him saying that they were worried about reserve requirements, but in reality they did not meet any conflict with their reserve requirements, Chris Cuomo completely nails this guy to the wall with this next statement about how the stock market works. And honestly, credit where credit is due. I've given the brother of Andrew Cuomo a ton of crap for the way that he's covered certain things, especially the performance of his brother during this pandemic crisis. But he did a good job nailing this guy, and he just did not have a response for what Chris Cuomo was throwing at him.
But that's the thing, is that the trust is in question, because it seems like the only people who are getting hurt were the big shots. And that if they were benefiting from this, your small investors now believe that you wouldn't have shut down the game. And just one thing without getting in the weeds here. You don't control the listing venue for GameStop. Now, I used to work in finance, so I know this stuff, but the audience doesn't need to. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
That is 100% accurate. It is the job of the New York Stock Exchange to deal with matters like this. And the idea that he was trying to prevent the manipulation of the price of GameStop by making people sell it makes no sense. Usually in these scenarios where the New York Stock Exchange pulls the plug, they prevent you from buying or selling the stock until the information required is put out to the public in order to better secure the transactions. This was a clear and transparent attempt on behalf of Robinhood to suppress buying and incentivize selling, and in some cases, reportedly, they were forcing people to sell, and other day trading apps were doing the exact same thing. Now look, I've made it absolutely clear that I think that Robinhood did the wrong thing. Forcing people into a position, even if you believe it's for their own good, especially when you have the appearance of a conflict of interest, is never going to be a good decision for your business. Now, with that being said, there are a ton of people who are jumping on board this bandwagon and saying that this appearance of a conflict of interest is due to that conflict of interest, which, by the way, we do not have the evidence for. And it's one of these things that happens all the time whenever we're discussing an industry that people don't quite understand and don't think provides any value because it's too complicated for them or they don't see the physical product. And I think that that is a problem in and of itself. There actually is a legitimate reason why Robinhood might have done this, even though I think it was a wrong-headed decision, and more importantly, not their decision to make. And I'm going to get into that in just a little bit. But before that, I want to talk about the value that hedge funds and speculative investment actually provides. Now, H3H3 is the perfect person to go to for stupid political or economic tweets, and in this occasion, he 100% delivered. But to be clear, I'm not attacking him personally because his sentiment is largely shared, and you can find almost anybody tweeting something almost identical. And that's the idea that hedge funds are just a black hole for money. They provide nothing to the economy. They create no value. And they should be punished because communism, I'm a rich person and these people are rich, but I'm a rich entertainer, so I don't like these people because I don't understand it, blah, blah, blah. Whatever stupid reason or justification Ethan Klein has for pushing this narrative. However, this is completely untrue and completely not the case. Speculative investment stabilizes prices and it stabilizes stock prices. The idea that these people are profiting from the downfall of GameStop may bother you, but in reality, the fact that so many people are betting on GameStop not having a long-term future prevents GameStop stock from fluctuating like crazy and getting people to buy into it and end up losing based on faulty information. You want the experts putting their money where their mouth is, and all we have to do is look to what happens when the absence of those experts is created to see the differential and why we end up in a much worse situation. And the perfect example of this is that Congress actually banned speculative investments related to the fresh onion market as a means to stabilize prices because it was believed that these people were just profiting and they were making the onion market completely unstable. It turns out the exact opposite was true. The onion fresh market was less stable post this ban than it was pre this ban, and this is happening at a time where we have better modern technology to know about supply lines and all these different things. So if you think that speculative investment is some parasitic way that people who are rich suck money out of the system without creating any value, you are just 100% wrong, and you should be excluded from the conversation, because in reality, these people are actually stabilizing prices, not just of stocks, but of everyday items, and they play an incredibly valuable role. And you don't have to look just to the Onion example. You can look to any study that covers this information. Now, with that very important piece of information being laid out for you, there's one more thing that I need to point out, and it should be abundantly obvious to everybody. However, unfortunately, it is not. The price of GameStop stock, which I'm going to put up as the price at the time that I'm editing this video, is overvalued. And if you are holding GameStop stock because you think that it's just going to go up forever, you are 100% wrong. What this is turning into is a pump and dump scheme. All of these people are bidding up the price of this stock because they intend to sell it off later. But here's the thing, that's not going to work forever, and it's not going to work for everybody. Somebody is going to end up losing money, and in reality, a lot of somebodies are going to end up losing a lot of money because the underlying fundamentals of GameStop have not changed. There hasn't been a change in the fact that people are favoring more PC gaming than console gaming. There hasn't been a change in the fact that people are doing more digital purchases and not in-store purchases. GameStop's same-store sales have not gone up dramatically, so this stock price is not representative of its actual value. And you can get on board with all these funny ideological posts all you want, but in reality, smart people are bidding up the price with this post so that they can sell it out. And you don't want to be the person that's holding the bag when that happens. Despite what any economic illiterate tells you, the price of a stock is not something that is completely disconnected from the fundamentals of the company. The price of the stock is not a magic number that evil, greedy billionaires on Wall Street decide about in order to go after the little guy. The price of the stock is based on supply and demand, which is why this artificial boost in demand is actually jacking up the price of the stock of GameStop, but it's also based on the underlying fundamentals of the company that you are actually trading. And GameStop's underlying fundamentals are not good. And if you think AMC is exempt, then what planet are you on? AMC operates a ton of movie theater chains across the country that are majority closed, and the ones that aren't closed don't have a lot of people in them because there's not a lot of new movies, and on top of that, a lot of people are not interested in going to the theater even if they were capable of doing so. AMC was struggling prior to the pandemic, so buying its stock during the pandemic for this weird pump and dump scheme is great as long as you get to dump the stock in time and reap the benefits. But if you think about getting in with all of your money and holding on to these new stocks because it's going to be just like GameStop, let me tell you, it's going to end just like GameStop, and it might not ever reach the peaks that GameStop reached. Look, I'm a capitalist. Capitalism is about profit and loss. Rewards and returns are proportional to their risk, but also the failure is proportional to what you put in. So if you don't feel comfortable with the amount of money that you have in the stock market, whether it be in your 401k or whether it's in these individual day trading stocks that you think are going to go up forever, if you're not comfortable losing that, then don't put that money in there. It is an insane risk, especially when all of these companies are undervalued companies. If a Wall Street firm was pumping up the stock in the way that the Reddit users were doing so, this would be considered fraud. Like, you have to understand that while you're going into this system. I don't care what any YouTube influencer tells you because they're definitely not above profiting off of their audience, especially in a way that is incredibly scammy. We've seen a million scams from YouTubers before. Don't fall for this trap. If you can't lose the money, then don't invest the money. And by the way, while I 100% agree that Robinhood and all these other apps that allow you to day trade made the wrong decisions for their customers, in that they made these decisions for their customers rather than warning them or letting them do this on their own, you can't tell me that all of these apps coming in unison to do the exact same thing is 100% to back the hedge fund guys on Wall Street when they realize that this is a pump and dump scheme for a lot of people, and the people that are pumping their money in there thinking that this is a revolution or the stock price is going to go up forever are actually going to be the ones left holding the bag. So there is an argument by these companies that their decision was made to protect their customers. However, they didn't make that case. They just decided this on their own and they forced people into selling, which is why I disagree with them. It's not necessarily that their diagnosis is wrong, or even despite conflicts of interest, their motivation is wrong. It's that their prescription and forcing that prescription on people was wrong. So look, while I love the memes, and I'm sure that some of you in the comments have already made or will make a ton of money by getting out at the wrong time, I can't in good conscience tell you that this is a great fun story where everybody's going to win, when I'm definitely seeing a bubble in a stock price where a lot of people are going to be left holding the bag. Maybe you can find that on somebody else's channel, somebody who's actually a day trader, somebody who actually has investments in this, somebody who's actually trying to pass off their bad stock to you. But I'm not going to do that. Not here, not on this channel, and anybody else who is doing that without giving you the clearest, most obvious warnings humanly possible isn't a good person to follow into the future. But hey, those are just my thoughts. Let me know your thoughts down in the comments below. If you like this video, you can show me by leaving a like. You can subscribe for more content. Follow me on all my social media links. They are linked in the description of this video. This is me talking about this crazy Reddit thing. Till next time.